Good morning, welcome to CATEX-TV. My name is Frank Fortunato. This is a live broadcast from Princeton, New Jersey. Today is Thursday, December 9th, 2010. It's 11:30 a.m. Eastern Standard Time in the U.S. It's 4:30 p.m. in London. In Hamilton, it's 12:30, and in Mexico City, 10:30. If you need to reach us during the broadcast, you can phone in toll-free at 1-866-67-CATEX. Overseas, our AOL Instant Mail address is CATEX-TV. The big story that we're not going to report on today is what seems to be a concerted effort by computer hackers worldwide to, one after another, serially shut down the sites of credit card companies and other payment transfer entities who publicly announced that they are no longer going to process contributions to WikiLeaks. Yesterday, MasterCard went down. Later in the afternoon, Visa went down. I understood that PayPal is now targeted, and it just seems to be a ripple effect, but all the sites seem to get back up after several hours, so hopefully things are quieted down. I did want to mention the American actor Kirk Douglas is 94 years old today. We keep hearing about his son Michael Douglas, who's struggling with esophageal cancer, and Kirk Douglas is still alive and apparently well. Now go to our main story. It's coming out of Bermuda. Flagstone Holdings will buy 8 million shares of Flagstone Reinsurance Holdings owned by companies associated with Mark Byrne. Mark Byrne, one of the company's founders and former chairman, announced he was retiring from the board of directors. He didn't give a reason for a retirement. The total deal is going to end up at about $103 million. That Mr. Byrne will end up taking out. It represents about 10% of Flagstone's Reinsurance Holdings' outstanding shares. Byrne is an interesting man. He served for 6 months as the head of the Bermuda Board of Education, a thankless job, getting involved in public education as a civilian to begin with, and even perhaps doubly so, getting involved in the regime under former Prime Minister Brown. Don't know what's going on down there, but we'll try to find out. We wish him well, that's for sure. It's an interesting story coming out of London. Lloyd's insurers will face an increase in the frequency, level, and formality of regulatory interventions. The corporation's new 2011-2013 strategy document shows. We downloaded the document, have it right here. It's right on the Lloyd's website. Actually makes for very interesting reading. Builds on the tougher tone that Tom Bolt in particular has been articulating in recent months. Lloyd said that one of its priorities next year would be closer market oversight, and that its role would become more prominent given current market conditions. The franchise board also believes that its role as a challenging business partner, this is not to describe it as a challenging in terms of conditions, but a challenging in terms of explain yourselves, business partner, will become more pronounced. To that end, it will seek to ensure that the boards of managing agents have access to relevant data to assist them, and also that work is underway to ensure that Lloyd's has the powers and processes needed to monitor the market's performance within the approved risk management framework. Managing agents' performance against the risk appetites and threshold is one of the mechanisms through which closer intervention from the corporation may be triggered. Market conditions, the document says, may mean that the corporation will need to intervene more frequently than in the past. I'd encourage you to download it and read it. It's a blueprint as to what they're planning on doing, and it fleshes out a lot of what Mr. Bolt has been saying in the past 12 months. Guy Carpenter announced that it has been awarded the wholly owned foreign enterprise broking license by the China Insurance Regulatory Commission. Subject to final business registration, Carpenter will become the first licensed international reinsurance intermediary to operate in China. It will provide reinsurance services in China as Guy Carpenter Insurance Brokers Limited. Carpenter currently has only a representative office in Beijing and a full-service office in Hong Kong. In an article in today's Insurance Day by Herbert Fromm, we've learned that Germany's insurers have a new head of regulation. A woman, Gabrielle Hahn, has been given responsibility within the financial watchdog, the BaFin, for the insurance industry. Hahn has headed the Federal Central Office for Taxation for the last 2 years. She's going to succeed Thomas Steffen, who was recruited by the finance minister to become head of the European Politics Division in the ministry in October. I'm sure he's thrilled with that. Ms. Hahn takes over her position, obviously, in a difficult time. Solvency II is leading to sharp opposition on the part of many insurers. Mr. von Baumhard down in Munich has commented on it to begin with. Hahn is believed to have no experience with the insurance industry. This is not unusual for the BaFin. Steffen was a newcomer to the subject when he was appointed. For such positions, the Berlin Finance Ministry looks for civil servants with leadership capabilities and the ability to assert him, or in this case herself, where possible international experience is going to be required. Knowledge of the sector concerned comes with the practical work already represented within the BaFin. Good luck to her. She's got a big job. Well, it's a revolving door, but this time the same person's in it. Broking giant Marsh has poached back Andrew Tunnicliffe from Aon to head its UK risk consulting arm. Tunnicliffe is a former managing director at Marsh. He spent the last 5 years with Aon. Most recently, he was the chief operating officer of Aon Global Risk Consulting. He's going to rejoin Marsh next year as head of Marsh Risk Consulting. He's going to succeed Jeff Colburn, who is returning to the U.S. to take a senior role here in Marsh Risk Consulting. Need a scorecard. Some economic news in the U.S. New U.S. claims for unemployment benefits fell more than expected last week. The 4-week moving average is now at a 2-year low. This is according to a Department of Labor release this morning. Of course, is reviving hopes that a labor market recovery is underway. Initial claims for state unemployment benefits dropped 17,000. People had been expecting down to a level of 421,000. Economists had been expecting a level of 425,000. The 4-week average, as I mentioned, has us at our lowest level in 2 years. U.S. wholesale inventories also jumped 1.9% in October. That was double the forecast. This is being interpreted as a sign of confidence by wholesalers that they're going to be able to sell those goods. Stock market is unimpressed by all this activity. It's down about 25 points. We'll go to a word from our sponsors and come back with the rest of the news.
Design for peace.
Here's an interesting story. Heavy rains and floods have forced the closure of the Panama Canal. This is the first time the canal has ever been closed due to weather. The first time in 21 years since the American invasion of Panama that the canal has been closed at all. More than 1,000 people in Panama were evacuated yesterday because of what authorities are calling historic rainfall. Meteorologists in Panama say it's never rained so much in the 73 years that we've kept climate records. The country's civil protection system put eastern Panama on high alert and issued evacuation orders for 1,500 more people. The canal was closed after water overflowed the banks of Lakes Gatun and Alajuela, which supply the canal. Keep in mind that last year work began on a $5.2 billion project to enlarge the canal by constructing a third set of locks to ensure that today's supersized container ships and oil tankers can get through. That should be completed by August of 2014. In London today, angry student protesters have massed down by Westminster to march on Parliament ahead of a controversial vote on plans to triple university tuition fees. The vote posts a crucial test for the viability of the Conservative-led partnership with the Liberal Dems. The vote also cast an uncomfortable spotlight on Deputy Prime Minister Nick Clegg, who, like other Liberal Democratic candidates, signed a pre-election pledge not to approve any such hike. Weeks of nationwide protests reach a crescendo today as thousands of students mounted demonstrations and sit-ins throughout the entire country today in Britain. In central London, demonstrators braved near-freezing temperatures to assemble down by Westminster. Hopefully there won't be any violence today. In Bangladesh, about 19 people at least have been killed and 60 others injured when two passenger trains collided just outside the capital of Dhaka. The accident occurred at a railway station in the town of Narshingdi, about 55 kilometers northeast of Dhaka. A passenger train slammed into another stationary passenger train last night. A witness said the engine car of the moving train rammed into the stationary train. This caused the two back carriages on the stationary train to fly into the air and crash back down on top of the engine car. Rescue trains are on the scene hoping to remove the wreckage. Well, there's an interesting blog we spotted by a fellow named Hester Plumridge. It's titled The Insurer's Chinese Pipe Dream. I'll paraphrase it. Is China the promised land for insurers? He starts by asking. He said, back in 2001, when restrictions on foreign firms were lifted, it certainly looked that way. He goes on to say, but the industry's high hopes are waning. He did refer to the Dutch insurer Aegon, is out to restructure its loss-making Asian business and still sees opportunity there. We reported that earlier this week. But he said that for the bulk of foreign insurers, turning a profit in China is going to be a struggle. Of course, he notes that Chinese opportunities do appear mouth-watering. Insurance penetration is low. The country already has the world's 6th largest insurance market by premiums. It's expecting an annual growth rate of 15% in insurance alone, compared to 3 to 5% for developed markets in coming years. However, he notes that the operations of foreign insurers in China are restricted. Virtually all must operate in a joint venture with a local partner. Domestic firms can apply for national licenses. Foreign companies have to apply to expand separately in different Chinese regions. The combined market share of foreign life insurers in China is just 5%. The combined market share for foreign P&C insurers is just 1%. The author of the blog notes that these statistics have fallen in the last 5 years. He observed that some insurers are happy with a small slice of a very big pie, but he said competition is fierce. 27 foreign life companies and 18 P&C companies compete with the giant behemoths, the homegrown companies, China Life and Ping An. Prudential is one of the biggest foreign players and only managed a £4 million pre-tax profit in 2009 after years of losses. He notes that